Hi, you're listening to the Childfree Wealth Podcast. We're your hosts, Bri and Dr. J, certified financial planner. Here we discuss life and finances as it relates to being child-free. This podcast is for educational and entertainment purposes only. Please consult your advisor before implementing any ideas heard on this podcast. Hey guys, we're back. I'm here with Dr. J, and we're going to be talking about the SVB Bank and protecting your money today. So, Dr. J, with the recent news of the Silicon Valley Bank going under, what can you tell us about that?
Oh, this is a fun one. I think we're going to learn more as we get a year or two away from it. But it's what was called a bank run, which is really simple. If you go to the bank right now and you try to take out all your money, and you ask for too much, they don't have it. One of my colleagues went to the bank the other day, and this woman was in front of him. She's probably in her 80s, and she had heard about these bank runs and said, hey, I want to pull out my $250,000 from the bank. And the bank goes, no, I don't have it. And of course, she then was like, this is in my account, give it to me. But the reality check is they probably might have 25 grand in cash or something like that. They don't have $250,000 in cash. And by the way, what was she going to do? Put it in the mattress? I mean, what would you do with $250,000 in cash, Bri?
I really don't know. I would not feel safe having that in my house or on my person. But when you say they don't have it, where is that money then?
So they've actually lent it out to people. And the way that the system works is they can actually lend more money than they bring in. It's a separate discussion. We can talk about economics and things, but they, in the Silicon Valley Bank example, they had bought a whole bunch of bonds and mortgage-backed securities that had a 10-year duration. But what happened was that works great as long as nobody wants their money in the 10 years because they're making money on it and they just have it on the banks. Everybody comes and asks for it. They actually had to sell bonds at a loss, and then that loss then gets hurt and it keeps like snowballing to the point where they don't have it. The banks themselves, they may have liquidity issues. This is like a fancy way of saying they just don't have the cash. Like, seriously, if you go in the vault and like, hey, is there piles of cash or like the Scrooge McDuck vault of gold coins? There isn't. There's zeros and ones on a bank account somewhere. And with SVB, it was kind of interesting as we pull it apart. They had enough money around. They were actually pretty well capitalized, but they didn't have it in the bank or in something they can get to. And this is kind of one of those weird things. You put money in, you think like they put it in Bri's account and leave it there. But no, they took Bri's amount and gave it to someone else for a mortgage, which is what a bank's supposed to do. But then when you go ask for your money, you're actually going to take money from someone else who just deposited something, and it keeps moving. And I don't know. I mean, you said you don't trust having $250,000 of cash in your mattress. Do you trust having it in the bank?
Yeah, I would.
Why?
I've been conditioned to say that banks are safe if they have FDIC backing.
Well, but now there are a whole bunch of people with millions of dollars in this bank and couldn't get it.
Yeah, it definitely brings a different perspective and makes a person think again on it.
So let's talk about this FDIC. All right. So FDIC is insurance that covers $250,000 per person let's call it per bank. There's some small things that you could have different accounts, but let's call it per bank. So you and your wife could insure up to $500,000. Once it gets over that $500,000, there is no insurance. Now, right now, the U.S. government has said, yeah, we're going to cover the rest of it. They go, well, why would I have more than $500,000 in cash in the bank? And for individuals, I'm going, I don't know. You shouldn't. You probably should invest that money or do things. But like, let's say you sold a house and the house was worth a bunch of money and the money's in there while you're buying the next house. The federal government said, hey, I'll cover you. But they don't have to. They could have just said, yep, everybody over $500,000, you need to wait until the bank is sold. Are you getting freaked out yet?
Yeah, a little bit. I mean, I don't have more than $500,000 laying around, so it makes me more comfortable, but yeah, a little bit.
By the way, it's okay to be a little freaked out. If you have more than, as an individual, $250,000 or as a couple, $500,000, you should spread that across different banks. Let's just be real on that. There's some services, one I use, and I get nothing for the referral, I just like them, is Max My Interest. They charge you a little fee, but they actually will move to the highest high yield savings account, but also stay on the FDIC limit. That's a good thing. That way, you're going to get your money back eventually. One of the issues with SVB was that a lot of people were like, yeah, I need to make payroll on Friday, and I need $1 million for payroll, and I don't have it. Which then becomes this next big nightmare of like, oh, my employer can't pay me? Sounds weird. I worked for a health system, and years ago they had some financial issues, and the staff used to actually, this back when we were getting paper checks, and I know like you've never seen that, Bri, because paper checks have never existed in your lifetime. But
I write paper checks to myself every month in my business.
Yeah, the ones you write, but you haven't seen an employer give a paper check, but used to be they take the paper checks down to the bank and be the first one to deposit it, because when it gets to the end of the payroll, they may not have enough money for everybody. Mm-hmm. Now, I mean, that's not today, but it's a lesson to learn. And our grandparents literally used to keep money in the mattress because bank runs and run on money, and what do I do? I mean, I don't know. The hard part of this is you don't want to freak out, but you want to be smart about it. Mm-hmm. What do you think, Bri?
I guess one question I have is, all of the money that people have, is there actually that amount of money like printed off somewhere and stored? Or is it just kind of an accounting number almost? And it's just written as we have that much amount of money, but it's never been printed off.
Oh, we can have a whole different debate on, what actually backs the dollar, and do we actually have dollars on hand and currency? And we'll lose listeners immediately when you start going down that road. But the reality check is it's zeros and ones. It is just computer code that says you have money. Mm-hmm. Now, the code is backed up and all that, and the paper just backs up the code. But it's a little rough. I also think the other thing that people don't think about with banking is, what happens if the internet's down? I know it sounds a weird concept, but it's happened before. Or what happens if you can't use your credit card or your debit card or whatever? I was at our old house when we were in Connecticut. We had a pretty rough winter storm, and we were out of power for almost 2 weeks. But we had a generator and all that. Go to the gas station, though, the credit card machine doesn't work.
Oh, yeah.
How much cash do you keep around, Bri?
Not much. Not much at all. I think I have like a 20 because my mom sent it to me for a birthday.
Yep. My rule with my wife is we each have to have $100 on cash at all times. Okay. Why? Because that's enough to get you out of most jams if your card doesn't work. Mm-hmm. In actuality, people ask me about emergency funds. If you won't spend it, I encourage people to leave $1,000 in cash somewhere secure. Now, mind you, there's a risk now people steal it or a house goes on fire. But you know what? We got to take one risk with the other. But if a tree falls in my house, I'm much more likely to get somebody to come out here and cut it up and make my house secure if I have cash on hand than trying to get them to take a credit card.
It's true.
But we're so used to let me Venmo you. Well, if I have no internet.
That was going to be my question. But yeah, I guess if you don't have internet and can't get cell service or anything, you can't Venmo people. Yeah. Great point.
Okay. For everybody listening, if you missed the intro, part of the fun of this with Bri is we are in 2 different generations. So you technically a millennial there, Bri?
I was born in 97, so I'm a Gen Zer.
Wow. So we're actually 3 generations apart. I'm Gen X. You're Gen Z. And I'll tell you, I don't love the generational tags, but 20 years of difference is a different perspective. I told Bri about emergency. She's like, well, I can just Venmo you. And I'm like, yeah, but what if you don't have internet? And she's like, oh. Literally, I was born when there was no internet. I know you've always had it. But it's the hard part. And when it comes to banking, we're just used to it all being there.
That's very true. Yeah, it's just typically there and easy. I mean, I log in on my phone, I check things, I move things around, I deposit checks on my phone, and yeah, if you don't have the internet, that's hard.
So last week we had, so I'm in Mississippi, and we had some tornadoes come through, and I actually had an internet outage. I have fiber, gigabit fiber to my house. I'm in the middle of nowhere, but someone had taken down the fiber and we were out for a day and a half. Like, I started having like the shakes and withdrawals from not having the internet. I mean, you can't stream anything because I don't have any cable TV. Like, I stream everything. I had to cancel client meetings. I couldn't even use my phone because I'm in the middle of nowhere. We have no cell phone service. I'm like outside holding my phone up and like trying to find a bar just to email people. We don't even think about these things. And it's all our finances are there.
Yep.
Did I freak you out yet, Bri?
It does, but also in the same sense, growing up with my grandparents on the farm and now my brother on the farm, I remember when in order to make a phone call with your cell phone, you had to go stand outside in the middle of the gravel road and just like one right specific spot in order to make that phone call. And even now there are spots out there you can't get any sort of connected, but when you say, does it freak you out with your money? Oh yeah, now it does. So I'm someone who I like to have access to my money.
All right, now that I freaked you out, let me work your way backwards. So, couple things. One, you got to have some cash hanging around because just stuff happens. One of my colleagues, when she was raising her kids, she gave them all a $100 bill in their wallet and said, if you ever get an emergency, you have this. You don't have to ask questions. I'll replace it. You're like in a cab, whatever. Now, by the way, everybody's like, well, now I can Uber if you have internet. Like, if you're seeing a recurring theme, it's all about technology. So we need to have a backup if technology doesn't work. From a banking standpoint, technology was actually what brought down SVB. It looks like what we've seen is Peter Thiel and a few others said to everybody else who's in the venture capital world, I think there's a problem at SVB. Pull your money out. And then overnight, billions gone. It was a Twitter bank run, essentially.
Oh, good Twitter. Good old Twitter.
By the way, the old school was literally there'd be a line outside the bank, and then one person would say, oh, they ran out of money, and next thing you know, the line is triple, and that was the bank run. So now we've brought it to the internet and done an internet bank run. So we want to make sure everything is under the FDIC limits. I don't care if it's over by $5, whatever. You'll just put that at risk. That means using multiple accounts. Also, if you've got more than the FDIC limit for cash, you probably should be investing it. Just rolling that out. Now, your investments are not guaranteed because they'll go up or down as the market goes up or down. But, you want to be making some money on it. Right now, high yield savings accounts are doing very well. We're in 2023. That's not a bad place, but I can split it across accounts. People say, well, can I use online banks? Sure, as long as they're FDIC. So I've been banking with Ally forever. Back when internet banks were a weird idea, they've been giving me a higher fee, higher interest than my local bank. Cool. They're FDIC. I don't need them to have a brick and mortar building to go to. That works fine. Also, since you were talking about everything's online, need some type of password manager so you have like real passwords, not like Post-it notes like my wife does for all of her passwords. And you need to, have some security around that two-factor authentication. The reality check of like, is my bank going to go under? Maybe, but your deposits should be okay. You just may have a delay of a week or two to get to it. So Bri, would you be okay if you had no access to your money for 2 weeks?
It would be a lot of calling to different places, like all of my reoccurring utilities, saying, hey, this is what's happening. And I did have that actually at one point in college. It was when I only used a debit card for anything, and somebody hacked into my bank account. And so for a couple of weeks I had to call and just say, hey, I'm sorry, I can't pay this right now. I have to wait because this is what happened. And they were fine with it. And everything got paid when I got my money back.
Yep. Most people can make it work. I like to have two different banks for that reason. Mm-hmm. Not necessarily because the banks are going to go under, but because the technology and financial technology sucks. And it's just like, you might go to log in and like, oh no, we're down for maintenance. And you're like, yeah, but I need my money. And they're like, nope. So you at least have that backup bank account. Also, when it comes to investing, keep in mind your cash may be protected on an FDIC dependent place, but your brokerage is not protected under FDIC. There's actually something different called SIPC, which is a different insurance for securities. The way this works is it protects up to $500,000. $250,000 of that can be cash, up to, no more. It protects it in case fraud. We're talking like the Bernie Madoff type things. And by the way, if you haven't seen it yet, check out the Madoff documentary. I think it was on Netflix. It was really interesting to see. We're talking about real fraud. That's what that protects against. The bonus of your brokerage is they're actually what's called a custodian. They're just holding your stock. And they're required to have it separate. So it's not like the bank where they take your money in and give it to someone else. They're required to hold it separate. Now, we can have some separate discussions on direct registration, a few things that might help you there, but just understand it's held separate. So if you have your money at Vanguard or Fidelity or whatever, and they go out of business, well, first thing is if like Vanguard goes out of business, they're the second largest holder in the U.S. We're all going to have issues, but your securities are still okay. Your whatever you've invested in. Keep in mind, SIPC does not protect against like, oh, what happens if, the company goes out of business like that I have invested in? No, you put all your money in Tesla and it all goes away, that's on you. Yeah. Or if it all goes up, that's on you too. The insurance doesn't protect. What's that?
That's a business risk that you take.
Yeah, that's the investment risk you're taking on. Yep. But you're still protected. You can't have like I'd have to figure out, I can't say never, but let's say there's not a highway, an easy way to have a bank run on a brokerage because the money's separate. The other thing you'll find is a lot of brokerages have a additional insurance that covers your assets up to millions of dollars as you go through it. So it's a little less risky. I think the reality check is you need to have a plan and to understand what risk you are taking. And while banks, yep, they're great, and we haven't seen too many bank closures, knock on wood. We've seen a bunch in the past couple months. It's been one of those things where there can be a contagion between banks, where people are taking their money from the smaller banks and going to the middle-sized banks, and then the smaller banks get run out of money, and then the middles have to go to. It's a bit of fear and freaking out. So I use that example of the woman who was trying to take out $250,000. She's going back to everybody in her community and saying the bank doesn't have my money. Mm-hmm. What the bank really meant is they have to order a bank drop-off. And by the way, if you want to see something fun, they order that. Don't tell you when it's coming. It comes in the armored car, the whole works. And then they hand this woman, here's $250,000. Good luck getting to your car. We had armored service come in, but they can get it. It just, they didn't have it at that moment.
Yeah.
But then people freak out. Well, if they didn't have her money, do they have my money? Mm-hmm. And this is where a bank run starts happening. We just start going through it. I don't know. I think the reality check for everybody is your money's probably safe. Don't go over the limits, but have a backup plan. Mm-hmm. So, Bri, you going to take out some money out of the ATM and leave some cash around now?
I might, yeah. Yeah, I might be doing that now.
I mean, your wife's a pilot. It's a great example. She could end up all over the U.S.
Yeah.
And a little cash probably is a good place for her to have.
She does keep cash on hand when she goes. She always goes and usually gets like $100 in ones, which sounds weird. But
is she going to the strip club? I mean, I'm just going to call out the $100 in ones.
She jokingly calls that it's her stripper money, but she takes it so she can tip van drivers and shuttle drivers and all that. So.
Yeah, a little cash is a good thing to have. I mean, you have to keep a lot of it. The other one, by the way, on cash is if you ever need emergencies, you can usually get discounts by paying by cash.
Yep.
You want to get a contractor at your house? Tell them you're paying cash, and they'll not only discount you, but they'll be there in 20 minutes. It's just kind of how it works. But I don't want to keep $250,000 in my mattress.
Yep.
Now, by the way, I will call it out because you may have a parent or a grandparent who's literally keeping the cash in the mattress. I'm not going to call any family members, but, let's just say I know some people. And the challenge is, A, knowing where it is. B, what happens if they don't, they can't tell you? Mm-hmm. And then how much is it? And it's also, by the way, not keeping up with inflation. Mm-hmm. One of my neighbors had a great example of this. His father, who was, from the Depression, so we're kind of working ages, always kept gold coins around in case things happen. So there was a little coffee can with gold coins. Everybody knew it existed. And Dad said, hey, if there's ever a rainy day, I've got these gold coins. Dad passes, and he never told anyone where the coins were.
Ooh.
They ripped up the entire house, the yard, everything, because it's probably buried out by a tree or something.
Yeah.
Never found it. They guess about $250,000 in gold coins is missing. And that's the challenge of keeping cash on hand. So at least know where it is, share with others. But you need to have some mix. We don't want to have all the money in our mattress. We don't want to have all of it in the bank. We don't want to have all of it in the market. We've got to find that balance.
That's a really good point about knowing where it is. I think too, sometimes it can be hard to have those discussions with parents. And I know that I am with my parents. I'm very much like, no, I need to know these things, because what if something happens?
Yep. Then
I'm going to be the one who's in charge of this and trying to figure things out.
And they tell you, oh, we'll tell you when it's time.
Yep.
And then they have a stroke and they're like, I can't tell you.
Yep, exactly.
Or dementia, Alzheimer's. That happened to be the example with my neighbor's dementia. And I was like, nope, not much we can do.
Yeah.
So
you never know.
My point is not, hey, put all your money in the bank or just have a plan, have it spread out. I'm not trying to get doomsday prepping on you and, everything. I mean, we could have a separate episode on that, but just have a little backup. When I talk about that emergency in the snow, I had cash and a gas tank and a generator, and I went to the gas station, filled up, and we had power the entire time, including internet. We had power, because remember, if your power goes out, you don't have internet.
Yep.
And we had no problems. I actually had to give some cash to one of my neighbors so he could do the same thing. And he's like, oh, never mind, I can't Venmo you. There's just the automatic, no, I can't. I'll send it to you when we get back.
Yep.
So, no.
Yeah, that, and too, just depending on generations, I know my parents, even my brother, who is younger than I am, they don't have Venmo. They're like, I don't know what that is. Sorry. And so having cash on hand can be really good, because there have been times where it's been one family member's paid for something, or my parents have paid for something and they need to pay my parents. And so then it all goes to me, and then I have to send money to them for whatever gift was bought. So having cash on hand is a very, very good point.
And people don't think about it, but Venmo, Cash App, PayPal are all essentially banking services with an app on it. You got to watch the money that's in there. There's been bigger issues there with people hacking accounts and all that, because not Bri, but many other people have one password for everything, and all of a sudden they're in their Venmo and other things. The other one to keep in mind, just one of those little plugs, if you're using Venmo, Cash App, all that, in 2023. IRS has said that if you get over $600 in cash deposits to you, you are going to get a 1099 on that and have to pay income taxes.
Okay, question with that then, because I know I'm already over that limit this year from trips, but so I paid for different things when I got married, on a destination wedding. So I paid for a bunch of things, and then people paid me back for different excursions. Do I have to pay taxes on what I was reimbursed for by those people?
If you don't have paperwork that says those are gifts, yes.
Okay.
This is the problem. So the $600 is the limit, and by the way, $600 is going out to eat a couple times. So if you cover it and Venmo a year apart, you can go over $600 in a month. But what happens if you don't have paperwork, and documentation of what that money is? You now have a 1099 for $10,000 of income. And you're going to be paying taxes on every penny of that.
Okay. So
you're freaking out, aren't you?
Yeah, a little bit. It was quite a bit. What can I do then, or what can other people do too, to say, hey, this wasn't a reimbursement for something?
You need paperwork. You need documentation. You need to show what that was.
Okay.
Also, this is where people try to get smart on the apps, oh, this is money I send to friends and family. Yeah, well, then you need something to say that's a gift. Then you may not have to pay taxes. Or, hey, it's a reimbursement up, then you may not. But if I said, hey, it's a gift, but then I don't have a reimbursement, it's getting weird. And you're going to have to talk to your tax preparer on this, but I have a feeling, so they were supposed to actually do that for 2022 and IRS pushed it off 1 year. I have a feeling a whole lot of people are going to get smacked upside the head by this because they don't think of Venmo being part of their banking and their income and all that. It is. And since you're a U.S. citizen, you are taxed on your worldwide earnings, which includes, hey, I sent you $20 for pizza.
Okay. That makes sense.
So you better have some documentation that says that's a gift or that's a reimbursement or whatever that is, and then have a good conversation with your tax preparer on that. Because if you don't, you're out of luck. Also, keep in mind, if you sell things on like eBay or Facebook Marketplace, all that, used to be there was a $20,000 and 200 item limit. Now it's $600 again. And that is income.
Yep.
So if Bri decides to sell all those books behind her, she probably got like $3, but sells all the books on eBay, then that all becomes income and you're going to have to pay tax on it. And people go, well, but I shouldn't have to pay tax. No. Any income you get, cash apps, payroll checks, Uber, any of that, you have to pay income taxes on.
Yep. Okay.
Now, by the way, people have hid it for years, but that's why they changed the rules.
Yeah.
We'll have a separate discussion on them going after the people with $600 in Venmo versus the billionaires not paying their taxes. But that's like a whole different topic.
Yeah. That makes sense. Okay. Things are coming together there.
So you're feeling better or worse about the banks?
I think I need to adjust how I do some things, and keeping cash on hand probably would be good. But I also, you mentioned having different accounts at different banks, and I'm very much that person. I have certain money that I don't like to see, so I have it at a different bank so I can't see it.
That's all for this week's episode of Childfree Wealth Podcast. Be sure to follow Childfree Wealth on social media, email us at podcast@childfreewealth.com, or visit our website, www.childfreewealth.com.